Hello from Otet Markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the seventh week of 2025. Last week, as always, first we check the last week and then we will see what can we expect from the week ahead. Last week started with the tariffs, with the US tariffs against Canada, Mexico, and China. For the Canada and Mexico, it was delayed for 30 days as the negotiations going on among solving the borders problems. But for the China, the tariffs started from February 4, and as a vice versa reaction, the Chinese also started the tariffs, posted the tariffs for against some US products, which is going to be start from they're going to be start from February 10. Some for some products 10%, for some other products about 15%. Generally, the we can say the trade tensions started, and there is no sign yet, and there is no news or update yet when US and China are gonna start their trade talks. The same story that we had 8 years ago. Anyway, so what we have right now, the trade tensions right now is going on between the US and China. There is uncertainty about the US and Canada and US and Mexico, which is delayed for 30 days, but we don't know what's going to happen after 30 days. And also, there's some tensions and some uncertainties and concerns about possible tensions between the US and UK, US and Eurozone. So we have to wait and see what Mr. Trump is going to decide for those areas and economic areas. On other places, last week we had mostly the PMI numbers. Overall, looking at the PMIs, we can say that the productions about the production sector generally, the manufacturing sector, was a little bit better than the service sector. Generally, the service sector in Europe, US, UK, they lost the momentum, but productions and about the manufacturing and industrial productions, they were a little bit better. Manufacturing PMI, especially in United States, for the first time since 2022, increased about 50 area. But that was a good news, which means that right now, after that, we know the service sector was fine in United States, and now we can say that the production also is better. Out of that, the most important news in United States, it was about the labor market. We know that the U.S. Labor market also with the NFP numbers on Friday was at the central stages, and with the unemployment rate falling to 4%, with average income increasing by 0.5% on the monthly base and 4.1% on the annual scale. We can say that the labor market is very strong with the higher income for laborers, which means right now there is more demand and the stronger inflation for longer. So which means that the U.S. Federal Reserve will have challenging days to lower the inflation generally. Out of the U.S., we had central bank meetings, especially in UK. BOE, as it was expected, cut the rates by 25 basis points, but it was not about that. The market reacted mostly because that all 9 members of PMC committee, MPC committee, monetary policy committee, all 9 members, they voted for cut for 25 basis point rate cut, and even 12 of them, they were asking for a 50 basis point rate cut or half percentage point rate cut. That made the kind of the dovish reaction from the central bank and put the pressure on GDP. Next week also we'll have more data from UK. We'll talk about that. But generally, out of that, we didn't. In Mexico, central bank cut the risk by 50 basis point. It was in line with expectation actually, but generally, yeah, that they cut the risk by 50 basis point. In the week ahead, central banks will have the most important central bank, which is going to have the monetary policy meeting. It's the Russian central bank. We expect to see the interest rate in Russia to be unchanged, to stay unchanged at 21%. It's going to be on Friday, I think. Friday, Thursday. We're going to have the central bank monetary on Friday. Yeah. CBR will have Central Bank of Russia will have interest rate decision, and it's expected to hold the rate at 21%. About the Russian economy, stock markets, and ruble, right now these days, the investors focus are turned towards the talks between the Russia and United States. Somehow, mostly then because we can say that the Russia and Ukraine. There is a talks between the peace talk between the Russia and United States. So they are talking together right now. If they can make a deal, so it can be supportive for both Russian stock markets and rules. But generally, what we have right now, the market's going to ignore somehow the economic data from the Russia, and mostly they're going to look to these how this peace talk is going on and what's going to be the decision and the final decision between those two powers. Out of that, in United States, by the way, the week will start. Let's start with the China because it's very important. The week will start with very important news from China. It's going to be the inflation numbers. The Chinese inflation is expected to increase by 0.4% in January, which is going to be a very good news for Chinese economy if it happened. We know that the government and the central bank in recent months they were working so hard to increase the demand in the market and to encourage the Chinese citizens to spend the money. They were somehow they were not they was optimistic about the future of the economy was lower in China. We can say like that. Then we say that yeah, better to say that with lower optimistic, with less optimistic about the future economy. The people they were a little bit angry on that and the conditions, so they were not spending their money. But recently, with the positive news, with the new year and the overall news about the tech companies. So we can say that right now the tech companies we can say that right now the Chinese somehow they started to spending the money. So that's why we expect inflation to increase by 0.4%, which is going to be the good news for the Chinese economy. And also we know that the new loans going to be published on Monday, and with the supports that the government had and the central bank, we expect to see that the new loans to increase by 4,500 billion compared with 990 billion that we had previous months. So generally, with the Chinese, when the week starts, we are expecting to start the week with the positive data from the China. In United States, the most important data will be on Wednesday and Thursday, the consumer price index and producer price index. About the consumer price index on Wednesday, we expect to see both CPI and core CPI to increase by 0.3% in January. If it happened, we are expecting to see that with the 0.3% increasing the inflation, we expect to see that the core inflation to be steady at 3.2% and headline inflation to remain at 2.9%. If we see these numbers, that means that the inflation is still high, and that will confirm the idea of longer for higher for the central bank, because this inflation will have more effort to be slower to calm. So that's why if that happened, it can be supportive for US dollar and negative news for US stock markets. On Thursday, we're going to have the PPI also in the United States, and for the PPI, we expect again to see that the PPI to be increased by 0.2% on the monthly scale, and confirm that still on the producer section also we have harder work for central bank to lower the inflation. But out of these, beside that, we have testifies. Federal Reserve, the Fed Chair Powell will testify on Tuesday and Wednesday. We know that testify will be very important, and Mr. Powell going to explain about the central bank's policies and decisions and why they made these decisions and what's their outlook generally. So we have to follow up this news as well. And we'll find on Friday in the week ahead, we're going to have the retail sales numbers for January. After somehow the positive and a good or increasing retail sales in November and December. In January, we expect to see the retail sales to be increased by 0.1%, which is to come somehow to fine. At least it's not a negative, but retail sales is increasing. We have to say with the but with the lower factory orders, make it can be lower, but generally with the 0.1%, at least 0.1% increase in retail sales, we can say that it's not such a bad news. In Eurozone generally, we don't have such important data we talk about, but we have the European Central Bank economic forecast and economic bulletin, which we have to. It's good for Euro traders and Euro investors that they're investing in the Eurozone or Eurozone stocks. They must be watched. They have to watch these news and they have to read these reports because they will explain what central banks expected in Eurozone, what central banks expected from the economy, and what's their outlook about that. In Eurozone, in Europe, but out of the Eurozone, British will have a very busy week, especially news about on Thursday, especially news about the GDP, manufacturing production, industrial production, and overall economic activity. We are expecting to have lower or weaker data. About the data that's going to be published during the week from the British economy, we are not positive. And if that happened, that can support the idea of another rate cut for the next meeting. Generally, we can say that I haven't thought if it's not happened, but it's gonna be expected. So generally, with the negative news, even if it's not a negative, we can say with not positive, with not optimistic news from United Kingdom, we can expect more pressure on British pound and UK stock markets. Generally, we are not positive about the UK economy's data, which is going to be published next week. So yeah, those are the most important data we are expecting for the week ahead. Let's go and check the charts. What we're going to have in the charts. Starting with the US dollar index, the US DXY was somehow flat in the previous two 3 weeks. With the positive data from US economy, especially labor markets. With the trade tensions, generally still we expect to see more demand for US dollar. And so the US dollar can hold its side movement with the even uptrend tendency. For generally, we are positive about the US dollar index still, especially if inflation number is going to show the higher numbers. We even thought the US dollar was strong in the previous weeks, but still the gold increased, and we are expecting to see more demand for gold as there's a more risk in the market, and gold safe having demand getting more investment in there, and with especially with the pressure that we expect to see in the stock markets. You can see the last week on Friday, especially after NFP numbers. As you can see here, let's see with the 4 hours chart. If you look at the after NFP numbers, you can see the pressure on the stock markets on the SP 500. With these pressure that we had on the stock market, we expect to see that pressure to be continued next week as well. So generally, we are negative about the stock markets in United States. So with the negative outlook for the stock market, especially we know that the earnings already is finished and we don't have such more important such as like more important earnings in the week ahead. That's why we expect more pressure on the stock markets right now, especially to be continued next week, which is the positive news for gold. But about the oil and energy, as mentioned, the US as we know, Mr. Trump also mentioned in the Davos economic forum that the United States is looking for the cheaper energy and oil. Last week also we saw that with more production in the United States and more imports, U.S. inventories increased by 8 million on the EIA reports and more than 5 million on the API report. So generally we can say that with more inventories in the United States and more productions, we are not positive about the oil price, especially with the negative news that we have from the Eurozone. Not positive, not much good economic data there. But generally, on the other hand, actually, I have to mention that the last week despite the higher inventories in the United States, the oil price didn't fall too much. The main reason because that the Saudi Arabia increased the price for Asian countries by $2.5. So this increase in the prices made a little bit the market challenging for the United States to lower the prices. That's why the price fell under $72, but didn't fall under $70. Generally, we are natural about the oil price with the higher in production in the United States, but at the same time with the geopolitical tensions, with the stock markets trends. Generally, the reasons to increase the oil price and falling the oil price with the cold winter that we have and the more demand for the energy. So generally, we are somehow the natural, but the oil price, and we can say that the oil price can be between $70 and $72 mostly during the week ahead. About the stock market, as mentioned, with the trade tensions, with the economic data that is strong from the United States, which means that the higher rates for longer which is going to be the most expected scenario for the Federal Reserve. We expect the pressure on the stock market. So S&P 500 most probably we're going to fall under 6,000 and then 5,930, and next target will be 5,800. 870 as the next targets for the S&P 500. Generally, we are negative about the stock markets. On the cryptocurrency market, BlackRock is looking after ETP. If they can confirm that, if they can get this certificate for the ETP, it can be the good news for generally for the cryptocurrency market. But as mentioned the previous weeks as well, after fading just like this the interest and just the emotions after elections. Generally, the cryptocurrency market are looking after the decisions, finally what Trump administration is going to decide and the new regulations. So they are waiting more mostly about the updates for this regulation and stuff like that. That's why they didn't have enough reasons to increase, but at the same time, with this general optimistic condition and it's like emotion didn't hold the investor from the selling more. But generally, the activities in the cryptocurrency market is lower, right? It's lower compared to previous weeks right now, and with the overall conditions, the concerns in the market, we can expect more pressure on the cryptocurrency market right now. But if the BlackRock can confirm the ETP, it may support the prices in the short term. But investors, they are waiting for any updates from the new regulations in the United States. So, but now under 101,000 US dollar, you're negative for cryptocurrency, especially for the Bitcoin price. Yeah, that was what happened last week and what we were expecting from the week ahead and the overall market condition. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye.